Welcome to ForexTV.com. Today's Monday, April 27th. I'm Tim Kelly with your New York Forex Market Buzz. Dollar is starting to extend gains against the majors at midday, and U.S. equity markets are also weakening more than halfway through the trading session. Both crude and gold prices are lower. Now for a quick look at the headlines. General Motors said the company plans to strengthen its balance sheet with a bond exchange offer and a slash in production, which would reduce its debt by $44 billion. The updated viability plan released Monday involves a proposed bond exchange offer of $27 billion in its unsecured public debt. The plan will convert $10 billion in U.S. debt to equity and leave GM bondholders with 10% of the company. The viability plan is subject to the cooperation of the U.S. Treasury and the United Auto Workers, the UAW union. The plan also involves phasing out of GM's Pontiac brand and a reduction in the number of U.S. dealerships from 6,246 in 2008 to a mere 3,605 by 2010. Elsewhere across the world, swine flu concerns are now gripping equity markets. Concerns over a flu pandemic caused U.S. equity futures to weaken on Monday ahead of the open, led by sharp drops in airline stocks. Dow Jones Industrial Average futures were down 1.74%, and the S&P futures were down 1.9% ahead of the open, but both indexes climbed back into positive territory around midday, now on the negative side once again. The World Health Organization, the WHO, is continuing to assess the global health threat, but has not issued any warnings yet. On Sunday, the U.S. declared a public health emergency after 20 cases of swine flu were confirmed in America. According to media reports, an emergency committee at the WHO will meet later on Monday to discuss declaring a health emergency. Today we're joined by Stephen Leahy, president of BackBay Fx. Stephen, welcome to the program again. Thanks for joining us.
Hi, Tim, and as always, thanks for having me on, and let me express some opinions and some views. Appreciate it.
Yeah, no worries. We find it very helpful. I think our viewers and listeners also find it helpful. Stephen, today, with a shortage of data out, wanted to talk to you about sentiment, trader sentiment, and starting with this flu pandemic warning or potential flu pandemic. It's not quite that at this point. Seems to have taken, as I said, taken a grip on the marketplace, and we see this focus on risk aversion at this point. Maybe you can give us some thoughts on where you think that's going to lead to right now in the absence of any real fundamental news today, and what seems to be a shortage of volume today. Could potentially mean a lot of volatility.
Sure. I would agree with you, Tim, that without much interesting economic data out there, really the market's attention is turned to, it's the basic choice. Am I putting on risk or am I taking off risk? Global swine flu potential epidemic has everyone kind of retreating and retrenching a little bit. We see euro pulling back pretty hard, meaning that there's a flight of safety towards U.S. dollars. As you and I speak about often, we believe that sterling yen is highly correlated with global equity markets, and we've seen sterling yen drop off for the last 16 hours or so here. And so, the truth is we think it's a little bit of a do-nothing day. As you said, light volume, not a heck of a lot going on here. And in truth, what we've seen today has really been a bit of a reversal of what we saw in the last couple of weeks. It seemed like there was more and more risk being put on the table. Euro dollar kept moving a little bit higher. Sterling dollar had moved higher up till the middle of last week or so. So today, just a little bit of profit-taking / risk aversion, but really nothing interesting to focus on as so far yet this week.
Steve, right now we were on the S&P 500. Let's just go back to this correlation issue because it seems to be in play a lot more in the past couple of weeks than it has in maybe the past couple of months leading up to this point. S&P is reaching some key resistance around that 870 level. Equities are dropping a little bit. We saw a couple of strings of up weeks. Could this also the timing could be coincidental with this flu story, but do you think we're maybe a little bit overbought in the equities markets and perhaps getting a little overbought from a risk standpoint?
Yeah, with the caveat that the world of equities is not my bailiwick per se, One man's opinion, I do think that there's been a little bit too much euphoria, too much risk put on the table here in the last few weeks. The truth is, as you mentioned earlier, you're talking about the GM. I think it's now a probable bankruptcy, right? There was revelation at the end of last week that the U.S. government was really kind of behind and pushing for the Bank of America Merrill Lynch deal. I think there's actually a lot of risk out there in the world that the steps that the central banks, and in our case the governments, are taking to help kind of boost the economy and specifically a lot of asset classes in general, I think there's a real risk out there that it may backfire. The truth of the matter is, you can check with the Bank of England circa 1992, when governments believe that they can outmaneuver market participants, governments tend to get hurt in the long run. And so going back to the S&P and sterling yen correlation that we've noted for years and years, we have seen in the last 2 weeks or so sterling yen's come off pretty significantly, not quite 10%, maybe let's call it 7.5% off in the last, last about 2.5, 3 weeks here. And so it does surprise us a little bit that U.S. equities or global equities have rallied over the last few weeks. And so, yeah, we are looking for a tipping point, that's for sure, in equities.
Okay, Stephen, I want to maybe just go through some of the majors, and I know that at this point there's not much to drive price projections at this point, but just doing a quick data check. Last time we spoke, we're pretty much at the same levels we were at back then. It was a couple of weeks ago with Euro at 130.23. What do you think the drivers ahead for Euro are going to be at this point? We don't, as I said, this week, certainly early this week, we don't have a whole lot of fundamental news driving markets. What do you think the drivers for Euros is going to be going forward?
Yeah, I do think Euro, there are kind of conflicting interests here, I guess, as there always are. That's what makes a market, right? Buyers and sellers find a price to exchange at. For us, as we look at Eurodollar, we're real concerned that there is some confusion and mixed messages coming out of the ECB. The ECB the European Central Bank has for a long time been the most clear and most concise about the fact of what their intentions were. Their President Jean-Claude Trichet constantly reminded us that they have a mandate to keep inflation around the 2.0 mark, that they're worried about inflation. And over the last 2 weeks or so, we've heard comments from other board members from the ECB saying that they can see quantitative easing happening, that they'd be comfortable with rates below the present 1.0%. And just a couple of changes out there, some mixed messages that are kind of undermining support for Eurodollar. So as much as we think the U.S. dollar is in trouble in the long term, we think the mixed messages coming out of the European Union Central Bank at this point in time put some selling pressure on euros.
Okay, Stephen, as we were speaking in the last hour or so, Euro has dropped precipitously. Anything that you can think of that would have precipitated this drop?
I caught a couple of news conferences out of the corner of my eye. Sheila Blair of the FDIC and out of Atlanta, the Center for Disease Control, CDC. I do think it's kind of a flight to safety to U.S. dollars here, and it may be actually big enough that it starts some momentum and starts really moving some technical indicators into the buy dollar territory. We think that most technical indicators that we look at up and through Sunday night had been showing us that we were going to sell dollars. So now buying of dollars has happened, and so will that momentum start kicking in and turn some technical indicators around and really then gather a lot more technical short-term traders to jump onto the long dollar bandwagon? Who knows? But that's kind of what we're starting to see here. And I do think the move in the last couple hours here really has just been that risk aversion, safe haven buying.
Okay, and that it's pretty precipitous, about 100 basis points drop at this point, and it continues as we speak. Okay, why don't we move ahead? Look at dollar yen at this point. Trading around 96.70. That's been a little bit heavy as well. I think there are a lot of folks, a lot of longs maybe got caught in a bit of a squeeze in this scenario. And folks that I talk to from a technical standpoint maybe think that we may shoot over, based on the unwinding of those long positions and stop losses, and drop down, give back some more value in the dollar against the yen. What's your take there?
I would agree. I think we're at a level here. We approached and tapped the 96.50 level earlier today. And I think that level is a level where we've seen a bunch of buying previously a number of weeks ago. That 96.50 was really a takeoff point a few weeks ago. I have it written down here in my notes as an important level for us. And so if we see 96.50 really starting to give way, really what you're going to end up doing is triggering stop losses. And remember, when you are trying to get out of a position, if you're trying to cover a long, you need to sell back, you'll sell it at any given level. And that's when we really start to see a cascading of price movements, either up or down. Whenever there are people covering, whenever stop loss levels that the market has a lot of have been hit, we start to see accelerating moves. And so we think that if the market really does clearly break through this 96.50, we'll see an acceleration to the downside.
Yeah, okay. Stephen, how about sterling? You touched on that as a basis of a cross against the yen and the risk. What do you think about sterling against dollar?
Yeah, interestingly, caught us a little off guard, I'll tell you the truth. We had a trade on of euro sterling last night that went against us. We thought the move was going to be higher here. And so the relative sterling strength relative to the euro kind of caught us off guard today. Again, I'll go back to, I think, the global risk aversion, swine flu, pulled down the yen crosses, euro yen and sterling yen, and that selling of sterling yen is what really caught us off guard when we saw that euro sterling move lower. If you do the cross pairs, it just doesn't seem to make sense to us. Okay. So, but as far as sterling goes, as an individual standalone currency, don't have a particular view on it right now. Again, just watching that as a cross-currency pair with yen as a heads-up to what we're going to see in the equity market.
Okay. Hey, Steve, I want to wrap up talking about commodity currencies. You see CAD and Aussie had gained against the dollar in the previous 2 weeks, giving it back today a little bit. Again, I think it's the risk story here, but maybe you can tell us what your thoughts are on the commodity currencies. Choose either one, CAD or Aussie. Not that we put them all in the same boat, but from a macro level, what's your take there?
Yeah, from a macro level, I think if I can step onto the Canadian dollar, their economy is tied really to two things: the commodities that underlie their economy, kind of gold and oil, but also the U.S. manufacturing and specifically the U.S. auto industry, highly tied into the Canadian economy. With more and more bad news coming out of Detroit and or Washington or whoever's controlling those companies at this point in time, Canadian dollar kind of took it to the chin a little bit earlier today. And as you point out, in the last hour, this dollar strength has really caught everyone by surprise here. We have seen Canadian dollar actually, like I said, the dollar had been weakening in the last few days of last week. We think we might see a reversal here, and Canadian dollar seems to be starting to soften itself as the U.S. dollar gains as a safe haven currency. Hey Tim, if I can add on one last thing as we are here towards the end of the interview, one of the things that we are looking forward to in terms to economic data later this week, and we do have GDP coming out on Wednesday morning, 8 a.m. Eastern time. Right. It'll be a really good one for us. And then, the FOMC meeting announcement on Wednesday at 2:15, they really don't have much more room to maneuver, so it's all about the language. You're going to have to really read the nuances of their language and compare what they said this time as compared to last time to get a hint of really if and how they have changed their opinion.
Okay, we'll certainly be looking forward to that. Stephen, thank you so much for joining us today.
Thanks for having me on, Tim. It's a pleasure as always.
This has been your New York Forex Market Buzz with Stephen Leahy of BackBay Fx. I'm Tim Kelly. Join us later this afternoon for PM Exchange right here on ForexTV.com.